In this video, I'll be showing you my highly profitable 5-minute time frame market structure break strategy, then testing it 100 trades in a row so you guys can get an idea of what type of results this strategy can produce. So let's start out by breaking down the exact strategy with the indicators being used and the rules to it. Then I'll get into the 100 tests and show the results at the end. So let's get into it, starting with the indicators. This strategy uses 3 indicators. The first one is the Trade Pro Market Structure Indicator, which will identify the relevant levels of market structure so you know exactly when market structure is broken, making a valid trading setup. If you do this by naked eye, there is the chance that you may be questioning what is a relevant level of market structure and when the market structure has officially been broken. So using an indicator like the Trade Pro Market Structure Indicator, it keeps it 100% objective, so there's no question whether or not the trading setup is valid. And this is available on my Patreon page, where you can get access to 3 custom indicators and 20 trading strategy scripts. You can learn my personal trading strategy fully broken down and get weekly market report videos made by me. Now, the 2 other indicators we have are for trend direction and pullback area of value, which I'll just explain in a second when I go through a bunch of examples of the full strategy so it all makes sense. We have a 50-period exponential moving average in yellow and a 200-period exponential moving average in white. And again, I'll show a bunch of examples for short setups and long setups here just in a sec. Now I'll break down the exact rules for this strategy, starting with rule number 1, the trend direction rule, which is determined by the exponential moving averages. If the yellow line, the 50-period EMA, is below the white, the 200-period EMA, you can only look for a short trading opportunity, and vice versa. If yellow line 50 EMA is over the white line, the 200 EMA, you can only look for a long opportunity. Now, rule number 2 is the pullback area of value rule, meaning price must pull back to and touch at least to the 50-period exponential moving average before you look for a trading setup based on a market structure break. Okay, so what that looks like is here, price is extended to the downside, it pulls back and it touches the 50-period exponential moving average right here, meaning at this point, you can start looking for a bearish market structure break because yellow is below white. We're only looking for bearish market structure breaks and shorting opportunities, okay? So rule number 3 is looking for an intermediate market structure break in your trend's favor once those first 2 conditions are met. Intermediate term structure is shown by the Trade Pro Market Structure Indicator as a yellow and green arrow below or above the candles. So you can see here, 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 and over here. We have intermediate term structure as well as down here. These single green arrows are only signaling the short-term structure. So we're only looking for an intermediate term market structure break, okay? So we see this pullback touches into the yellow, 50 EMA here, so we can start looking for an intermediate term market structure break. Price drops a bit, comes up again, no structure breaks yet, but then it pushes down here, and it breaks this level of intermediate term structure. At this point, we have a bearish structure break in the main trend's favor. Now is to look for an entry opportunity, and that opportunity will be the first pullback or consolidation after the market structure break. And this is the trading setup part. So market structure break here when this candle occurs. Then we wait for a pullback or consolidation, and that is our shorting opportunity. That's when we enter in to the trade and we look for that next move to continue. So we're looking for a lower high compared to this high here, the high of the move that broke structure, here. So the high up here, we're looking for a lower high on this pullback. This would be the pullback to be entering a short on and looking for another move to the downside for a lower high and lower low. That is the trading setup. So let's go through a few more examples. And the next one here. So we have another pullback here, touches the yellow. And now we can look for an intermediate term market structure break to the bearish side. So price consolidates. We actually get that intermediate term structure right here with the yellow and green. So at this point, once this is confirmed, we can look for a market structure break. We get that right here on this candle. So once this candle has closed, we can then look for a pullback or consolidation to get short on. So there's a small pullback on this candle, which is pointed to by this big red candle. That's a shorting opportunity. Then pushes down. There's a consolidation here, which is another shorting opportunity in this area with the other red arrow signaling that. Two opportunities to be getting short and looking for a continuation move to the downside, which we see follow through here. So that's the trading setup. The high, which is where the stop loss would be placed, would be right here, because to the right of this intermediate term structure, the high here before the break of structure to the downside, that is where stop loss would be placed. Okay, so let's move on, look for our next setup. So again, price pulls back into yellow, still in a downtrend. Once it touches right here, we can then start looking for an intermediate term market structure break, which happens over here. So you can see our intermediate term structure signaled here with the yellow and the green arrows below this candle, marking intermediate term low. Then we have the high before the break of structure. That's our stop loss area, looking for a lower high and then continuation down. So structure break right here. We get the pullback right here and the follow through here. We have another pullback or consolidation down here as well, which is also another opportunity which follows through for another lower low. So we're looking for a lower high compared to this high initially after that structure break and a follow through to the downside. So pullback or consolidation after the market structure break is our entry to get in for another move in the trend's favor. Let's move on to another setup here. Here's our next one. So we see the pullback here into yellow. Still in a downtrend, yellow is below white, so we're only looking for shorting opportunities. So with this pullback, we're now looking for an intermediate term structure break. Right here, we get the signal for an intermediate term structure. So we're looking for that to be broken to the downside before we are looking for a trading opportunity. So we get this pullback here, push down to break that intermediate term structure bearishly, and now a pullback or consolidation after that market structure break will be where we look to get short. So this pullback right here is the shorting opportunity where we'll be looking for this follow through move. So we get kind of this three-wave move is the pattern of this strategy. Push down, break structure, pullback or consolidation, shorting entry, looking for a follow through move. That's what we're looking for. And we're looking for the lower high compared to this high here, the high before the market structure break push down. Okay. Now here's an example of a setup that does not work out. Okay. So we get the pullback here. So we're looking for the next intermediate term market structure break. We get that here. So pullback, start looking for intermediate term structure break, which occurs right here. We get a pullback, but the high before the structure break was taken out here before we have any sort of follow through to the downside. So we never got our pullback, then follow through. So this is an example of a failure. This would be a loss. Now let's move on to our next one. We have again, pullback, It's above yellow. So we're looking for an intermediate term structure break. We get that structure here. We have the break on this push down. So here's the high before that push down. That's where we would be expecting a lower high. So stop loss could be above here. So once that breaks here on this candle, structure is broken. We look to this pullback as the shorting opportunity, looking for a lower high compared to up here, and then a lower low. We get that move, pullback, consolidation, follow through for a lower low, and this one goes quite a ways. So that is the setup. So there's some shorting opportunities. There's this loss here. And let's move on to some long setups so you guys fully understand both the long and short side and what this trading strategy setup looks like. Now let's go through a few long setups, and this one we will do without having it all marked in beforehand so it can make even more sense, and we'll find the setups as they come. So now in an uptrend, yellow's over the 200 EMA, so we're only looking for pullbacks to go long, and we see a pullback here into the yellow, so we'll be looking for an intermediate term market structure break. So we see it pop up right here, so we'll be looking for this break, which does happen right here on this candle. So ideally we want to see this a higher low compared to here, okay, and then a follow through move to the upside. So we get the break right here. So we're looking to long this pullback and then look for this continuation move to the upside and looking for a higher low to not take out down here. So that's what we see. Breaks to the upside right here, intermediate term structure bullishly broken, and then pullback and follow through to the upside. So that's what we want to see. This one would be classified as a success. So let's move on. And now this one has panned out. We're waiting for another pullback. Still in an uptrend, we see a pullback right here, so we're looking for a structure break. We can draw that in here. So that's where it's broken on this candle. This candle right here breaks the structure, so longing opportunity is going to be any pullback here. So broken, we see a small pullback, and then a follow through. Looks like we get another consolidation up here, which also follows through. So that would be considered a success right here. Let's move on. We're looking for another pullback. We see a pullback right here into the 50 period exponential moving average, which is over the 200 still. So we're looking for a long. We're looking for this structure to break once we get an intermediate term structure formation here. So we get the break right here. And then the low down here, we're looking for a higher low compared to that. And we're looking to long any pullbacks. So we get broken to the upside, pull back. This is our buying area. Then we expect a follow through move to the upside, which we get here. Then again, we're looking for another pullback. We don't see any intermediate term structure breaks. This is currently the lowest point of structure. We see a structure right here, and it is broken to the upside. So new structure here, looking for that to break to the upside, which it does. Here's the low. We want to see a higher low here, and we want to long a pullback. So we have a pullback here, which goes up, pullback here, goes up. So that would be considered a success as well, because we do get pullbacks with follow throughs to the upside here. Okay, so again, right here, pull back, we have the high right here, and this one, if you use this low as the structure, would have failed. So you can see we get the break right here, pull back, and broken here. So if your stop loss was here, stopped out, it's a fail. Okay. If you're looking at this low over here, this ends up being the most relevant intermediate term structure. So this is the lowest or the most recent intermediate term structure before this high intermediate term structure. That ends up being the relevant one. So we get the break here to the upside, we get a larger pullback, and then the follow through to the upside here. Okay. So that is the setup. This one will be classified as a failure. And it's time for the 100 tests and the results to be shown at the end. So let's get into the 100 tests. All right, results are in after the 100 back-tested trade setup. So let's take a look. This was tested on Bitcoin against the US dollar on a 5-minute time frame, and it took 36 days of price data to find the 100 trade setups. Out of those 100, there were 67 successful trading opportunities and 33 failures. Out of those, the biggest winning streak was 10 and the biggest losing streak was 6. So this did produce some very impressive backtesting results. That doesn't mean that it will stay profitable, but it is very promising to see this data come out of the test. I've also just popped up on the screen here a few of the most recent setups for Bitcoin. So out of these 4, 3 of them have played out successfully, and 1 is currently in progress here with the most current price data. So you can see how this can put you in a great opportunity using this market structure break style of trading. So since I didn't use a strict risk to reward ratio that I can use to give this strategy a gain on the account figure like most of the other tests I've done on the channel, what I've done here is just given an example. So if you had used an average of 1 to 1.5 risk to reward ratio, then you could have given this strategy a 67.5% gain on the account figure, risking 1% of your account per trade. And so very, very high figure there. And even with a 1 to 1 risk to reward ratio, according to this test, still producing very profitable results with a 67% win rate being incredibly high. So this one did really well and is very promising, definitely worth taking a look at and trying out. So that will conclude things. Quick plug for my Patreon page if you do want to access the market structure script or indicator, and also get access to other custom indicators on there and 20 trading strategy scripts. Learn my personal trading strategy and get weekly market report videos. Also, if you don't want to spend any money on anything, you can support the channel by liking the video, commenting down below for the YouTube algorithm, or using my Bybit affiliate link. All right. Thank you guys again for watching, and hope you have a great day.